Welcome back, grinders. It is a wonderful Friday evening. Uh, you made it. You made it through the weekend. And if you were investing in the stock market, you definitely experienced a very volatile week, right? So before we get in, I just wanted to kind of highlight what happened today. So pre-market, the bears were definitely controlled, push all the major indexes lower this morning, pre-market before the opening bell. And maybe about 20 minutes into the trading day, we see shares of a lot of the tech companies in the market overall just start to move higher. And so we're going to look at the charts today and we're going to see exactly what happened. And I made a move today and I actually called it yesterday what I was going to do if I saw a setup that I was looking for based on what's happened in the past month. We were talking about supply and demand zones. And so before we get into it, so the supply zone essentially is when say you're watching the QQQ, and you pull up the QQQ chart and you see where there's consistently a level where the shares move up, and then once they hit this certain level, they start to crater down. That is your supply zone. So it hits a ceiling and then it goes down. So there's more shares that are available, supply zone. And then your demand zone is like the opposite. Say you're in a downtrend and all of a sudden it hits a certain level, and then you see this big gap back up, and there's a lot of buying, a lot of volume. Buyers are coming back in and taking over and defeating the bears at that moment. That is the demand zone where it reverses course and then shares push higher. So we'll talk about that in the charts, and we'll go over a couple of other things that happened today. So let's dive right into it. Let me share my screen. Make sure y'all can see me in the corner. There I am. All right. So let's get to it. So like we said, the market bounced back. Let's look at the scoreboards, the three major indexes. Make it a little bit bigger for you guys. So the S&P 500 essentially closed flat today. The NASDAQ was up barely, essentially flat as well. And then the Dow couldn't climb out of that hole, finished down 0.65% today. But you can see we were well off of the lows for the day in all three major indexes. Okay, so it was nice to see that bounce. Also, we've been talking about crypto. Still looks like we're pulling back. I bought a little bit under 100K and moved a little bit lower. You can see it's moved about 4%. Ethereum holding steady around that 3K. So we'll see what happens there. I'd imagine next week, if we get a rally in tech stocks and the market overall moves higher, then Bitcoin might reverse course and move higher as well. But we'll see. It's been kind of tied to the market this year, but it doesn't necessarily mean it's going to stay that course. So time will tell. We'll just have to be patient and see what happens. But right now, I think this is a nice spot to be adding on. And if you don't have any Bitcoin whatsoever, maybe it's your time to start jumping in, do a little bit of research. You could also buy a company like Robinhood too, or Coinbase. Those companies are kind of tied to crypto and how crypto trades. And if you're more comfortable buying a publicly traded company opposed to crypto, maybe you want to try that route as well. So one thing I did notice today, and I thought I pulled it up for you guys. Let me see. Boom. So let's find it. While I'm searching for it, Warren Buffett has been pretty much selling and sitting on the side all year, and hasn't really been participating in the AI trade. But today, I believe this happened after the market closed. Here we go. Berkshire Hathaway decided to start a position in Alphabet in the third quarter, which might have contributed to that huge jump after earnings, right? You see there was a lot of money that was piled into Alphabet. Now they're still continuing to sell, I believe they said Apple shares and a couple other companies as well. But rounding out in their top 10 is now Alphabet. You see, Apple is still, even though they've been selling shares, it's still their largest holding. American Express, Bank of America, I believe today they said they sold some shares in Bank of America as well. But Coca-Cola, Chevron, Oxy, Booties, Chubb, Kraft Heinz. This is a look at Warren Buffett's Berkshire Hathaway's largest holdings in their massive portfolio. So it's good to see, and I think this is going to be very positive for the AI trade moving forward. Warren has been on the side, and now we're seeing that he is jumping in to the AI trade and decided to pick Google as one of the winners of this trade. And then I want to take a look at Google and their, oh my goodness, it's moved up higher from last time I saw. I saw aftermarket, it was up maybe about 1.5%. Now it's up over 3.5% in after hours. So that's a nice boost. I think that's going to definitely contribute to the Qs probably moving higher come Monday. Let's see if there's anything we can see. Yeah, up 0.36%. Not bad. We closed the day. Our peak today was at 613, and that gave us a boost up to 611 for the QQQ. I actually got into a QQQ call. I actually added on to an existing position. We'll talk about that here in just a moment. But if you're someone who likes trading options, definitely check out our Patreon, All in Society Investing. And we do long-term investing. We show our strategies for long-term investing and options trading in there. We pretty much, our options trading is kind of hybrid long-term investing. We're not doing day trading. We're doing more so leap options. We're holding our contracts to like 6 months plus. If you can get it a year plus, even better, because then you save on taxes. So if you want to see our strategies, our winning strategies, our proven winning strategies, I post pretty regularly how we're performing. Anytime we have a win, I'll definitely share that with you guys on our social medias and then the Patreon as well. So if you like this video, information like this is in the free version. And if you want to join the paid version, you get our real-time trades and then get all of our strategies. I've created a course for long-term investing. I do have a free video on just basics and options trading that you can see on YouTube as well. So it should be in the All in Society collection. I can't think of the lack of a word right now, but it's in that playlist. So definitely check it out if you're not familiar with options whatsoever and you want to jump in. The paid version is only $10 per month. Guarantee you get well over $10 of value each month by joining the community. So definitely check it out. Now that I'm looking at it, we can see post-market. We're seeing like quite a few jumps. Nothing substantial, but NVIDIA's up. Palo Alto has been getting kicked in the mouth here past 5 days, down 3% past 5 days. Looks like they're trying to rebound up 1%. They have earnings next week. NVIDIA has earnings next week as well. So that's why I'm really bullish on this AI trade. And excited to see what NVIDIA has to say. If a lot of analysts are expecting a nice quarter, them beat and raise guidance. And NVIDIA is already as great at explaining the AI story and what is going to be in the next stages, what's going to push things higher going forward. And I just look forward to that. So it's going to be a big week next week. I look forward to it. The NVIDIA earnings are going to be on Wednesday, so you don't have to wait too long. It'll be on hump day. All right. I didn't want to scroll down here. Netflix isn't one of our biggest plays, but we have a decent amount in it. So they're going to do, I'm pretty sure off the top of my head, a 10-for-1 stock split. So say if you had 10 shares in Netflix at the close today, I believe on Monday, it's either Monday or Tuesday. My bad, I don't have this on the top of my head, but definitely next week they're going to split their shares. And if you have 10 shares, you're going to have 100. So for each share that you have, you'll get 9 more. Okay. So if you have one share, you'll end up with 10. So, but I want you guys to be mindful of this. Just because Netflix goes from $1,000 to $111 next week, that does not mean that Netflix shares are any cheaper. They still hold the same value. So if you felt that Netflix was too expensive today, when you see it at $111, that does not mean that it's cheaper. If you didn't buy it then, if you don't understand it then, if you weren't comfortable getting the trade then, you should not be getting into the trade come next week. Okay? Now, do your research, and then definitely if you're in the Patreon, reach out and I'll tell you why I think it's going to be a great play, something to hold on long term. But just I want you to be mindful. I can't stress this enough. If you did not feel that if you did not feel Netflix was valued or was a great buy today, do not rush to buy it when it's at $111. I'm not telling you not to buy Netflix, but I'm saying it is not any cheaper because it is $111 rather than $1,112. Okay. So, but as you can see, we're invested in Netflix. I think this is going to be great for options traders because you're going to be able to trade Netflix options and it's not going to cost you, your mortgage payment or, something silly like that. It was super expensive to trade Netflix options. So with that split, it should be hopefully more affordable to trade options on it. And I think Netflix is going to be a nice play heading into next year. We are down 8% for the past month, but year to date, we're pretty good, up 25% year to date. That's not bad. So I think Netflix has a lot of levers that they can pull to drive more revenue and more growth. They could probably raise the price of their subscriptions and folks probably would not, get rid of it, cancel it, and move on to something else. You've already seen we have the Christmas games in NFL coming up. I think there's other sports and other things they could do. I would love to see Netflix. I remember Amazon Prime. They had I could be wrong, but I'm just gonna say Jay-Z, and they had these like mini concerts they used to have and put on. I think Netflix, if they haven't done anything like this, that could be really awesome. And just think if it was in a world where we have these, say Meta rolls out these glasses or Apple able to make the Vision Pro a lot more affordable and everyone has a AR, VR glasses and you can just sit at home and you can feel like you're at a concert. I think Netflix would be a great company to be able to do something like this. They can partner with a company like Meta, with Apple, and create these new experiences and things like that that could allow us to just be transported into this immersive world and environment and enjoy our favorite artists, movies, and things of that nature in the future. So I'm just kind of thinking off the top of my head. I think Netflix has a lot of things that they can do to continue this growth moving forward. So it's going to be cheaper per se because it'll be only $111. But even now, I was buying Netflix when it dipped below $1,150. So it's still in that range, but I feel it's pretty reasonably priced. It's still pretty expensive. The valuation is pretty high. If you're someone who likes to look at PEs, it's 4 PE is 36 times. And that's actually pretty good when you look over in this column here where it's been the past previous quarters. That's pretty good. I mean, quarter here was 54 times, right? When Netflix went crazy earlier this year. So I like Netflix long term. I think it's something that's going to be great. They'll be able to utilize AI. So if you want something to do with AI play, but it's not probably going to trade like these AI companies, even though it looks like they are as of recent, then Netflix could be a company you might be interested in investing in. So I just want to throw that out there and let you guys be mindful just in case you see like, how the heck did Netflix drop from $1,000 to $100? Okay. All right. One last thing that I wanted to discuss before we get into the charts. So I believe the conference was Seeking Alpha. I believe it's a conference hosted by CNBC. But CEO Mary Callahan Erdos, I probably butchered her name. I apologize. She's the CEO of JPMorgan's Asset and Wealth Management. She believes that everyone has been talking about this AI bubble. She thinks it's kind of crazy talk, a crazy concept to think that there's an AI bubble. She says instead, she views AI as a significant transformative opportunity. And she suggests investors focus on long-term potential rather than short-term valuation worries. And when we think about it, this year, there's been a lot of companies that have had huge valuations. I mean, for years, Tesla's had a huge valuation because everyone thinks Elon's a genius and he's going to, make the world a better place. He makes all these promises and he's going to keep all his promises. And Tesla is going to be this company that's going to be rolling out robots and autonomous vehicles and all of that. So we're already in an environment where a company like Tesla, it doesn't trade on valuation. It trades on, it has a cult following and people pile money into it because they believe Elon is going to change the game and he's going to take Tesla into one of the greatest companies the world has ever seen. Now, do I necessarily believe that? No, I think there's going to be a lot of competitors in robots. I heard today Apple is talking about rolling out robots. If you want to talk about autonomous vehicles, you have Uber that's partnering and rolling out autonomous vehicles. You have Waymo now in California. It's going to be rolling out autonomous vehicles on the highway. Tesla still has people in the driver's seat testing out their autonomous vehicle. What's the word I want to use? Technology. So, yeah, I think Elon is a brilliant man, and he's really created these companies, and it's going to change the world. It is changing the world, but I'm not touching Tesla, and so we've already have a example of high value or companies that are making a lot of money as far as the share price is moving higher, but the fundamentals of the company and the valuation of the company makes you scratch your head like what? Why is this company valued the way it is? But to get back into the AI trade, she sees it as an opportunity and not to necessarily worry about the valuations of these companies. Look at what they're promising, looking at the revenue growth, and then we'll talk about a little bit more from her words rather than mine. Again, she sees it an opportunity, not a bubble. She argues that AI is not a bubble, but rather a major revolution in how companies operate and unprecedented value creation opportunity. Focused on opportunity ahead, she emphasizes the investors should be looking at opportunities AI presents rather than fixating on the bubble narrative like Michael Burry. You probably remember his name from the Big Short movie, and he shorted the housing market and made a ton of money doing that back in the day. Granularity is key. When asked if AI is a bubble, she suggests a granular approach to the answer, noting that while traction is building in the US, companies are far from fully realizing the benefits on their bottom lines. And then investment still has a long way to go. That's good to hear. Erdos points out that there will be explosive growth in both revenue and expenses as suppliers and companies integrate AI, indicating that the investment cycle is still in its early stages. And last but not least, internal adoption at JPMorgan. So JPMorgan itself is actively integrating AI with its generative AI toolkit deployed to over 200,000 employees to drive efficiencies and save costs. So she's not just talking about it. They're putting this to work. She's putting her theories and her thoughts to work, and they're actually doing it within their business. So I thought that was something that was key to discuss and relate to you guys. Now I know it's just one person. There's difference of opinions, but recently we've been hearing a lot of talking AI bubble, and that's what scares everybody and gets everybody excited. And so that's what the media is going to report on. Like even today, you see these graphics on CNBC where there's a big bear and it's roaring. Like, come on! Like, why are you guys trying to facilitate the market to get pushed down? They should just. Anyways, I don't want to get too far into that, but I'm glad that the market did reverse and looks like the AI trade is in full effect still. So last thing I want to look at is the chart of QQQ. And so if you didn't look at previous video, yesterday we talked about supply zones and demand zones. And I didn't know the video cut out at the end, so I apologize. So let's go over that now. So we started this episode talking about supply and demand zones. So this is a month chart of the QQQ. I'm going to look at the hour chart so we can see a little bit more of what's going on here. So first, let's focus on a supply zone. So when we think of a supply zone, think of it as kind of like when it hits a ceiling. And let me see if I can zoom this in a little bit more for you guys. When we see it hits this ceiling up here, right? And this is, I believe it's the 52-week high for a QQQ right here. It hits this high, and then you see shares kind of move down here. Then it goes back towards it, and then it moves down. Look how far we moved down from there. Okay? That's kind of like I might have said this wrong, but if I did, this is your supply zone. Okay? There's more supply in the market because people are selling. There's more shares that are available for you to scoop up and buy at a discounted price. Whereas we see multiple occasions here, and when I talked about, I said this $600 range, you see this line right here, we see multiple times, 3 times, look, touches 600, shoots higher, okay? Hits the supply zone, comes down to the demand zone at 600, right? Shoots higher. Again, right here we get to see a consolidation. This is a supply zone, pushes shares down again. Then it gets back down here to your demand zone where people want to buy. And that's what happened today. The shares pushed back up and we consolidated around the 608, 609 area where we closed. So I said yesterday, based on, don't look over here on the far right. I said based on right here, it hit that 600 level, boom, pushed higher. And even back here in October, hit that $600 level, then boom, we moved into that new 52-week high. So my theory was if we hit that $600 level and it bounces off of there and you see a lot of volume, a lot of momentum, that is game time. That means we need to get busy. We need to put some money in the market and make it work for us. And so that's exactly what I did today. I jumped into a QQQ call and that thing ran up, and the contract that I already had existing contract. I just had one contract of I think it was I'm giving you some game. It was a $620 strike, which expires next year. I'm not going to tell you when. You'll have to join the Patreon to see exactly the play that we're in. But expires next year, and we want to take advantage of this momentum to push higher. So we get Berkshire saying they're jumping into Google, right? So that is bullish for the AI trade. We have JPMorgan saying AI is not a bubble. This is opportunity. Who do you think was probably buying today? JPMorgan probably want to hit this demand zone and shot higher. And then we have NVDA earnings tomorrow. NVIDIA beats on earnings, beats on revenues, raises guidance. That thing's going to take off. NVIDIA share is going to be over $200 again, I believe. And the QQQ is going to benefit. And we might be heading into new highs for the end of the year. And December is going to be a nice little Santa Claus rally where a lot of people are starting to throw money into the market because they want to chase. And they want to make sure that they have a performance that is, if not better than the S&P 500's performance for the year overall, at least get close to whatever the S&P 500 performed, because that's kind of like what the benchmark is. We personally have invested in past couple of years, beat the S&P 500, crushed it in multiple portfolios. In our retirement portfolios, we beat it last year, we're beating it this year currently. And then we had smaller portfolios. We were kind of showing at the beginning of this year that we can grow a small account with $5,000 or less and be very selective in the companies we invested in. So we picked companies like Uber, we picked Vertiv Holdings, Apple, And I can't believe Robinhood's. I can't remember if Robinhood's in that portfolio or not off the top of my head. But we invest in all those companies, and we are absolutely crushing the S&P 500. I'm pretty sure we're doubling the S&P 500's return. So I wanted to kind of show you don't have to have a ton of money to get nice returns from the stock market. If you have proven strategies and you know when to buy companies, you know how to evaluate a company to determine if it's fairly priced, underpriced, or overpriced. So that's it. Enjoy the rest of your weekend. I'll see you guys on Monday.